Okay, let's talk about Apple. I mean, it's not just a company, right? It's a global icon, a master of design, and a financial juggernaut that's pretty much in a league of its own. It has literally defined entire product categories and built this incredible empire of loyal customers. But today, we're going to ask a really critical question. Is that fortress starting to show some cracks? Let's dive in.
To even begin to grasp the scale we're talking about, you have to start with this number, $3.45 trillion. That's Apple's market cap. It is a figure so huge it's kind of hard to wrap your head around it. It's just a testament to its unbelievable success and power in the market.
And, a valuation like that creates this core tension. You think a company that big would be completely untouchable. But what's interesting is that right now, just beneath the surface, there are these powerful forces gathering that could seriously challenge the very foundations of Apple's success.
So first, let's get a handle on the fortress itself. Apple's financial strength is, well, it's legendary. But as you're about to see, where that strength comes from is changing in a really fundamental way. And that's creating both some amazing opportunities and some brand new vulnerabilities.
At its heart, Apple today is really what you could call a two-speed company. First, you've got the iPhone, right? It makes up over half of all revenue. That's the mature, stable, foundational pillar of the whole thing. But look at that growing slice for services. That is the new high-speed growth engine, and it is changing everything.
And that shift to services has a really powerful effect on the bottom line. The company's gross margin, which is just a fancy way of saying how much profit it makes on what it sells, is climbing, and climbing steadily. Now, this isn't just about selling pricier phones. No, this is about the super high-margin, recurring revenue from services making the entire company fundamentally more profitable.
All right, so with that foundation in place, let's look at the optimistic view, the bull case. Why do so many investors believe that Apple's best days are actually still ahead? Well, it really boils down to two massive, powerful growth engines that are just now starting to fire on all cylinders. And here they are, side by side. First, you've got this idea of an AI-driven supercycle for the hardware, and second, there's the continued, seemingly unstoppable expansion of that services business we just talked about. Let's break each one of these down.
For the last few years, iPhone growth has been kind of flat, right? The big bet now is on Apple Intelligence. By making these cool new AI features exclusive to the very newest models, Apple is creating a very powerful reason for millions and millions of people to finally upgrade their phones. Some analysts are even projecting this could drive a 12% jump in shipments. That would be a huge reacceleration.
And then you have the services juggernaut. I mean, just think about this. It's built on a staggering base of over 2.3 billion active devices. This whole division has gross margins near 70%. And get this, less than half of all Apple users are currently paying for any subscription. The runway for growth here is just enormous. It's a predictable, recurring profit machine.
But for every powerful engine, there's a potential roadblock. And in Apple's case, the threats are serious, they're hard to put a number on, and they strike at the very heart of its business model. This, my friends, is the bear case.
And just like the bull case, the bear case is really built on two core pillars. On one hand, a historic regulatory challenge right here at home. And on the other, a deep, systemic geopolitical risk that's all tied up in its global supply chain.
This lawsuit from the U.S. Department of Justice is, you could argue, the biggest threat Apple has faced in a decade. We're not talking about just a fine here. This is a direct attack on the walled garden itself. The DOJ is basically saying Apple uses its power to crush competition in everything from gaming and messaging all the way to digital payments.
And here it is. This quote from the lawsuit really sums it all up. This is the central charge. If the government wins, Apple could be forced to open up its entire ecosystem, allowing things like alternative app stores, which could directly threaten that massive high-margin river of cash it gets from the App Store.
The second major threat is geopolitical. And to understand it, you just need to know this one number, over 90%. Over 90% of Apple's products are assembled in China. That incredible concentration creates a profound vulnerability to things like trade wars, tariffs, and just the escalating tensions between the US and China. So, okay, we have the bulls, who are betting big on AI and services. And then you have the bears, pointing to regulators and geopolitics. How in the world do these massive forces balance out?
It all really comes down on this one idea.
Apple's greatest strength is also its greatest weakness. That walled garden, that seamless, beautiful integration of hardware and software is what creates incredible customer loyalty and enables that super profitable services business. But that exact same closed system is what has made it a prime target for regulators all around the world. We can actually see this whole story reflected right in the stock's valuation. If we use a metric called the price-to-earnings ratio, which is basically just how much investors are willing to pay for each dollar of a company's profit, we see Apple trades at around 35 times earnings. Now that's a clear premium compared to Google and Meta.
In fact, look at this. Apple is valued at more than double a traditional hardware company like Dell. The market is clearly not treating Apple like a company that just sells boxes. No way. It's valuing it as a high-end, luxury software and services provider.
So that's the setup. You've got these incredible profit engines and this premium valuation on one side of the scale, and on the other, you have these existential legal and geopolitical threats. Where does that leave us?
Well, our takeaway here is a hold. And here's why. While that AI catalyst is really compelling, the stock's premium price tag seems to have already baked in a lot of that good news. But more importantly, those regulatory and geopolitical risks are just too big and too unpredictable to ignore, which creates a really balanced risk versus reward profile at this price.
So, what should you be watching for? These are the key catalysts to keep an eye on. The iPhone 17 launch in September 2025, that's going to be our first real look at whether this AI supercycle is for real. The upcoming earnings reports will tell us if that services momentum is still going strong. And of course, the full AI rollout in 2026 will be the ultimate test of the whole bull thesis.
Which leaves us with one final thought to chew on. For decades, Apple's walled garden has been its impenetrable fortress, keeping customers happily inside and competitors locked out. The big question for the next decade is whether regulators and rivals will finally succeed in turning that fortress into a prison. The answer to that question is going to determine the future of this tech titan.